Pay attention, man. Pay attention. It's your finance guy, TorrellPriest. First and foremost, let's thank God for another day. All I ask is if you take anything from this video that you please like, share, subscribe. This helps grow the channel, build the platform so we can help and reach more people and get the eyes of some of these experts to come on the show and help us out. So this week, we're going to be talking about strategies, tips, do's and don'ts when it comes to buying vehicles. As many of you may know, I've been in the automobile industry now for close to a decade, on the sales side, as far as selling cars, and on the finance side, doing your loan paperwork, pulling credit, things of that sort, getting everybody approved for loans and things of that sort. So I just want to take my experience here, probably do like a part 1, part 2, part 3 thing, but I just want to give out some gems and things of that sort. So once you are going into these dealerships and you're buying vehicles, things to look out for, things that you should be doing, products that you should be taking, and stuff to stay away from. So first and foremost, let's talk about selling or trading in your vehicle to a dealership. All right. So right now, there's a rare time in the industry. The first time that I've seen this, cars are actually appreciating right now. Right. There's a chip shortage, so manufacturers are not able to produce as many vehicles, therefore causing a decrease in the number of cars out there, making the price of the vehicles go up. All right, so we usually think of cars as liabilities. They usually are, but right now it can be an asset. I know I just looked at my mom's truck that we got her a year and a half ago or something like that, and it's actually worth more with the miles, with the year being older, than what we paid for it a year and a half ago. All right, so if there's a time in which you're looking to sell your vehicle back to the dealership or trade your vehicle in, this is the time. You will be getting the most bang for your buck at this point. Now, with that said, with trading the vehicle in, cars are worth more now, so the price of cars are definitely going up as well. So keep that in mind, right? So your cars that you usually see, get you a $300 car payment, things of that sort. These cars are up $4 to $5 grand on the average. All right, so just keep that in mind. All right, but if you are looking to sell your vehicle, right now is the time. And if you are looking to trade your vehicle in or sell your vehicle, you can go on kellybluebook.com, put your VIN number in there, put your condition of your vehicle, your trim level, things of that sort, and already have an idea of what your car is worth or how much it's worth for a trade-in and things of that sort before you even arrive to the dealership. So if a dealer tells you your car is worth $10,000 and you know it's worth $12,000, you can come in there with some kind of power to let them know that, hey, I did the Kelly Blue Book research and things of that sort, because they're always going to try to, spend as less money as possible on your trade so they can sell it for a higher value. All right, so do your research before going into a dealership when you're looking to sell it, trade your vehicle in. Gives you a little bit more power once you get in there and you're ready to negotiate and do what you got to do. Next thing I wanted to roll into is going to be gap insurance. All right, so with these cars being valued a little bit higher, a lot higher than they usually are, once this weird chip shortage thing is over with, the cars are going to go back to normal value. Okay, so a lot of people that are buying vehicles right now, and you're going into the dealerships and you're buying vehicles, they're a little overvalued. Okay, so which means is we might get into these loans. So say you bought a Nissan Altima for $20,000. Usually it's worth or pay out $16,000 on retail, something like that, right? So now with this vehicle, you're gonna owe, once the curve comes back down, you're gonna owe a little bit more on this vehicle than what it's worth. All right, so if you was to get into a total loss car accident, the insurance company is only liable for how much the car is actually worth, not how much you owe on your loan. All right, so gap insurance is one of those needed things. All right, if you're not putting any money down or you have a high interest rate on your vehicles, gap insurance is needed. All right, so if I have a car and I have a loan that's $20,000, but my car is only worth $14,000, I get into a total loss car accident, my insurance company only pays out the $14,000, leaving me with a $6,000 balance for a car I no longer have. All right, this happens very, very, very often. All right, because usually we're buying a depreciating asset, so you're buying it retail and your car is constantly depreciating, but the loan value is not going on. I mean, not going down as fast. All right. This happens a couple of ways. A, when we buy the car at too high of a price, like right now, right? You're buying a car at a high value in which the car is not really worth that. And it's not going to be worth that in a year when this curve goes down. Or two, your interest rate is too high, right? So if we're getting into these loans, 18% interest, 15% interest, 20% interest, you're paying 20% interest on your dollar. All right. So say your car payment is $500. A lot of your money is not going towards the principal getting that loan down. It's going towards the interest going back to the bank in which they're charging you to borrow the money. So your car is constantly depreciating, but your loan amount isn't going down. And it's creating a gap between how much your car is actually worth and how much you actually owe on your loan. All right, so we got to make sure we get the gap insurance. I mean, it's only like 7 or 10 extra bucks on your monthly payment. This is the case you get into a total loss car accident. The gap insurance kicks in and pays that difference there. So if you do get into a total loss car accident, you don't owe the bank any money. The gap kicks in and pays that for you, and you can go into your next vehicle. And the last but not least, man, I want to give out your generic way in which you could tell your monthly payments. I know a lot of us want to get into these loans and you want to know, hey, what's my monthly payment, or how I can track what my monthly payment will be. All right, so the generic answer for that, with decent credit, right, because the credit rating is going to be different. So if you get an 18% interest rate, your payment's going to be a lot higher than if you was to get a 4% interest rate, right? So let's say you're like in the middle of the road, you're 680, 600 credit score, things of that sort, 9-10% interest rate, things of that sort. Every $5,000 you finance, that's going to be $100 on your monthly payment. All right. So if you're doing a 72-month loan, that's going to be 6 years. Say if I have a $15,000 vehicle, right? That's 5,000, 5,000, 5,000. You could think or generally consume or assume that my monthly payment is going to be around $300 a month. All right. So if it's $20,000, then that's another $5,000, so that's going to be $400 a month. All right, so every $5,000 that you finance, that's going to be $100 in your monthly. Right. So when you're coming into these dealerships, right, and you're looking at a $20,000 vehicle, and you say you want your payments around, $350, $300, now you know, hey, I have to have some money down. Alrighty, so that can get me closer, so $3,000, $2,000 down. That can get my interest rate down as well, and then get my payment lower, because I know without any money down for a $20,000 vehicle, I'm already looking at a $400 car payment. All right, so just to wrap that up, money down is a big thing too. I know we hear a lot of commercials, and, oh, come in, no money down. Da, 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 da. If you don't have any skin in the game, your interest rate's going to be a lot higher, and you're going to drive off the lot with a higher car payment. Always have about $1,500 to $2,000 to put down. It's not going to make a huge difference, but typically it'll get your interest rate a little lower for you. The bank is seeing that, hey, you are putting some skin in the game, so they're going to charge you less on your interest, and you'll have a better car payment and some equity in the vehicle, right? So that gap won't be as long or be as large. All right, because if we go in there, like I said, with the gap insurance, our cars are depreciating and the loan is staying up here. We got some money in, that's some equity, so you're getting closer to the value of the vehicle. But that's going to wrap it up for us this week. So first and foremost, this is a rare time. Cars are actually appreciating right now, right? So if you want to sell your vehicle, now is the time. Bring it up to your nearest dealership. Get the Kelly Blue Book value before you come to the dealership, so you can kind of know exactly where your car or what your car is worth. All right, get ready to trade that bad boy in or sell it to the dealership. This is the time where you can get the most money. All right. Second, gap insurance. All right, we have to get gap insurance when we have these high loan interest rates, these 15, 16, anything over 12%, and you're not putting any money down or any equity into the vehicle. You need gap insurance. All righty. Or if you're buying cars now, because of the retail value is so high because of the chip shortage, in the years it's going to fall off. 6 months is going to fall off. We have to get gap insurance. All right, gap insurance is, if you get into a total loss car accident, it's going to cover the difference between how much you actually own your vehicle and how much your car is actually worth. So you're not responsible for a car you no longer own. And then last but not least, when we're calculating payments, we're going to a dealership and we said we want a certain amount of payments. Every $5,000 you finance, that's going to be $100 on your monthly payment. So if we're looking at a $20,000 vehicle, $5,000 goes into that 4 times. So that's a $400 car payment. All right. Have some money down. Get that equity in there so you can get a lower interest rate and get those monthly payments a little lower. And we should be good to go. All right. Any questions, just let me know. Any details or you need me to go into anything, just let me know. Whatever you guys want to hear, just comment and let me know on that side. All right. And if you guys are ready to protect your legacy or protect your family, any life insurance, IUL, some tax-free retirement things, annuities and things of that sort, I'm your guy. I can write those policies for you, so just hit me up. I'll leave my email up here and we can get you protected. Just like, share, and subscribe to the channel. This helps grow the channel, build the platform, so we can reach and help more people and get the eyes of some of these experts to come on the show and help us out. And remember, a worker without a plan is just a slave. See you guys next week.